Good morning, guys. Good morning. Somebody give me a sound check. Let me know if you hear me okay. And let me see if I've got you here. Should be able to see my screen. How we doing here, guys? Oops, nope, sharing it now. Good morning, screen is good, right? Okay, let's just, let me just clarify this. Cleanness. Delete, close, combo alerts. Okay. Nice and clean. Huh. Oh, wait, hold on. Control I want to change this. Edit. What do we change this to? The break size was 10, right? 10. Close. Yeah, okay, now you guys can see this much better. Save this as combo new. Yes. Okay. All right, good morning. We have, we seem to be late to the ball all the time here. And then we're going to change the start times. We're going to change the start. How come this is, huh? That's weird. Okay, so you guys, it's interesting. I'm looking at the CFD of Nasdaq, and the CFD of Nasdaq actually did not have a buy signal because I guess of the pricing here, this was not a trend slice. This was just the way it's trading as a continuation slice. Whereas on futures, I actually did have a trend signal over here. Oops, what happened here? Oh, sorry. This is CFDs. This is futures. Okay. Yeah, so you see the futures, there actually was a new trend, new signal, made money, blah, blah, blah. So that's just a function of CFDs. Just let me just take this off. But we did have a good trade coming up here that worked very well. And there was also, I don't know if I looked at the Dow. Let's see if we got this. Now, Dow did not have, it had a small arrow here, so not a true up signal. So we'll see. Dow had a big pop back up. Maybe the moving averages will turn around. So people are asking me that whether I can explain the basic setup, which I'd like to do. Let me just see if everybody's in the room here. Okay. So here's my question to you. Would you like me to explain the setup from moment go, as though you knew nothing, in a nice slow fashion? Is there anybody in the room who needs that to go through it? Because it's Friday, I'm happy to do this for you, and I'll show you what I've really been focusing on as my slant. If I don't hear, if nobody posts anything in the room, then we'll just continue. Okay, Juan. Okay, Juan says he wants the full setup. So let's do it this way. Let's go to, we're gonna use Nasdaq as our basis, and then we'll let's just go to default. I guess default. No, I want to just, okay, let's just do it this way. I'm gonna delete combo alerts. Delete. Okay, so let's start with our foundational trade, the 1 minute Nasdaq chart. That's the primary instrument I trade, and that is what the system is based upon, and then we'll expand into currencies and everything else. But for now, this is designed directly for the 1 minute Nasdaq chart. So we have the 1 minute Nasdaq chart, and we're going to lay down the combo alerts indicator on there. Okay, I'm just going to put down as my template. So the combo alerts indicator, the way I have it designed, has only one type of signal, the trend breakout signal. And the trend breakout signal, let me just undo this. The trend breakout signal is triggered on the following conditions. So when the fast moving average, which is a 12-period moving average, is, I'm going to give you the upside and then the downside, is above the slow, which is a 26 EMA. So 12, 26, those are the MACD averages. The first thing that happens is one has to be above the other, condition one. Condition two is we need to have the high of the first three candles that are above trend. So this is 1, 2, 3. These are three candles. The third candle here is the highest high. And we need that level to be broken in order for us to have what's called a trend break signal. So in this particular case, this candle over here breaks the high of the top three. That becomes a trend break signal, right? That's condition number 3. Finally, the type of a trend break is determined whether it's higher high or lower high. So if a trend break has a higher high than the prior trend break, it doesn't matter if the prior trend break is up or down. It's just that it's got to be a higher high at this point relative to this one. If that's true, then we get a signal like this. It's called a strong trend breakout signal. And it's got this triangle, this two-color triangle. It's a strong trend breakout signal. That's presumably our best possibility for profit. We get long here, 15-point stop, 10-point target, right? And boom, boom, boom. This, you can see that it makes it. Our whole idea, the whole essence of what we try and do in the strategy is to scalp the first upside move or the first downside move. I'll get to that in just 1 second, of trend. We do not, at this point, try to capture the continuity of trend one way or the other. We haven't really designed any intelligent way to do that just yet. So what we're focusing on is just the highest probability, the easiest, most likely trade to profit, which is the big breakout, and then the small amount of continuation. That puts us hopefully into the 75% win zone. We only need about 70% to win, but if we're at 75%, which is 3 out of 4 trades, we are well ahead of our profit target. Okay, so that's the upside structure. Is that clear to everybody at this point? If it's not clear, let me know. Okay. So the downside structure is the exact opposite conditions. Moving average has to be below the slow, 12 below 26. The bottom three, the third lowest low. So this is the lowest low of these 3 candles. This is the level. Level gets broken, right? And the broken candle, the candle that breaks the level, has a lower high than the prior big candle. As long as that's true, we get a big true signal, true big signal, and we can trade it to the downside. That's it. That's all we're doing. We're just trading big breakouts to the upside, to the downside. Now, the final condition that we impose on our trading is that we only trade 10 GMT to 19 GMT. You could do one. I allow myself one trade at the opening of Asia session, which is around 2200 GMT. Basically, from 2200 to 2400 GMT, I will allow myself one trade. Okay, I'm going to stick to just GMT times. You guys translate to your own times because otherwise it's just going to be very, very confusing. Just remember, I'm always going to be using GMT times, and you guys figure out what that means to you. okay? Because otherwise I'm just going to confuse the hell out of everybody. So 10 to 19. This particular time zone is like, I think, +3 to GMT. Let me just tell you for sure. Right now, it is 14, yes, it's three hours ahead of GMT. So in this particular case, I would not start trading Nasdaq until it was 1300 GMT. So somewhere around here. And as a matter of fact, this was the trade that I did at the beginning of European session. I took this trade here. Let me show it to you. Let me see if I can, hang on, let me just show you. See if I can find it. Yeah. You can see it. You can just visually see it. This was the trade. It was after 10 o'clock GMT. This was the trade, same trade. Bum, 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 and you can take it. So I had one trade here, and then we had a second trade, which showed up over here. The upside. Oops. Second trade, you don't have it here because it was a trade on futures, not CFDs. So the second trade was, sorry, it goes like this. It was this trade over here, right? Now notice that there is a massive amount of additional profit. We don't care. We're not focused on that. We're just focused on making highly, highly accurate scalp trades, okay? So we have entry conditions. We have time conditions. And the final thing that I started to do is side conditions. Side meaning that I'm only trading long-only setups. I've literally stepped away from taking the short trades. This is strictly for equity indices. And the reason why I've done that is because the long-only side, what we're trying to do with this particular setup is create the absolute highest possibility of winning percentage, okay? The absolute highest possibility of winning percentage. That is our only goal. We have very defined risk, very defined targets. Given the structure of it's a 15-point stop, 10-point target, it's 60% break even. That's all we need to do. So the higher accuracy, if we can go to 75, 80% accuracy, we've built a 20% profit margin. We've built a very, very high profit margin. That's all we want to do. So what we want to do is want to maximize our potential for winning. So why do I then just focus on the long side? If you guys didn't see this article yesterday on 60-second, I'm going to publish it over the weekend, but you should really read this because this goes point by point. All you really need to do is just let me show this to you. Is look at this chart. I don't know if you can, I wonder if you can do open image in new tab. I wonder if you can do this bigger. I can't do this any bigger. What this is basically a statistical study of how many winning days versus how many losing days there are in the stock market. And this is done by decade. And the first and foremost thing you see is that literally every single decade, the winners are more than the losers. And right now in the 2020s, it's not just that they are more, they're ridiculously more. There's a 15% spread between winners and losers. And to put that in perspective, roulette is a 4.5% spread. Blackjack is a 3% spread, meaning that the house only has a 3% advantage on one side, and they still make a ton of money. The basic spread in Vegas is 5% to the house, meaning it's like a 52.5 to 47.5 market. And if the stock market is basically showing you that it's a 52.5 to 47.5 long to short, and if your job is to be on the side of the highest probability win, then you just want to stay on the long side, even if that means you're going to give up opportunities, right? Now, what's really interesting about this particular image, which some of you may not appreciate because you're younger than me, but why is this not opening up in a new tab? Okay, but what you'll notice is that all of these periods were generally positive stock market periods. And, the 2000s were not. Even the 2000s, it's really interesting. The 2000s were a flat period. The stock market was flat all through the 2000s, but you still had a 5% bet. But what's fascinating is that the single worst stock market period since the Great Depression was the 1970s. The stock market literally didn't do anything, and it lost 50% of its value twice during that decade. And still, there was 51.3 winning days against 48.7 losing days. And this is the key thing that I think I'm trying, I had this big insight that even on down days, the up signals are more accurate, right? That's the key thing. They don't fail as much as the down signals. And all we're trying to do, we are avoiding what's called adverse selection. We're trying to be like insurance companies. We only want to sell insurance to people who don't need it. We only want to put stops on trades that don't need it, right? Think about that. A stop is like an insurance policy, and we never want the insurance policy to be collected. So that's what we're trying to do. That's why I trade the long side only now on the Nasdaq, the Dow, and all the other stock indices. Okay, let's go back to the charts and let's see if anything is going on here. First of all, now it looks like everything is just blowing up. Looks like so much for big moves. The Dow went negative, right? So Dow is a negative bid, and now if Dow turns itself around, we may have a potential positive move in a Dow. S&P is potentially setting up. We would need the S&P to break the high here for us. It's really interesting, actually. Is this right? Oh, this is a 5-minute chart. Sorry, I was like, how is this possible? Because the 1-minute chart doesn't even look like this. So the 1-minute chart is kind of moving away. If we want to go on a 5-minute chart on the S&P, we might have a breakout here on the 5-minute chart. I wonder what the 5-minute chart on the Dow would look like. Nothing new. So Dow would have to break through this high over here for it's quite a move. It's about 70 points higher for the Dow to really be a consideration for us to the upside. But you can see here's an up signal over here. That works. Here's a down signal over here. It doesn't. It doesn't mean that the down signals don't work. The whole question is if the up signal is even like 5% more accurate, then over a long time, it just creates a much bigger edge for me. I'm just looking to make money on every trade possible, right? Does that make sense to everybody? And that means that I'm not gonna trade a lot. I've cut down my trading significantly. I went from doing like 30 trades a day to basically doing 3 trades a day right now, with much better results, much better results. Because I just put all these strict conditions on my trading. So that's basically the stock index futures structure. And then when we go to currencies, currencies are obviously not an upward bias market. What is going on over here? Jesus. Okay, here we go. They're a two-way market because currencies are bounded. They don't have an upward drift, So currencies we can try and trade both ways. Although surprisingly enough, I still don't understand why the up trades in currencies seem to work better than the shorts. Like my long portfolio is up, my short portfolio is slightly down. That could just be bad sampling or whatever. I'm also running quite a lot of currency pairs because I'm trying to figure out, how to narrow it down to like maybe 4 or 5 really high quality currency pairs. But regardless, it's also picking up and working relatively well on these trades. So on the currencies, this is a 5-minute chart, which is okay, but I really prefer to give myself a little bit more room. I give myself the 15-minute chart, right? And if I'm trading the 15-minute chart, what's interesting actually is I shortened my targets, shortened my stops on the 15-minute chart from 40 stop 20 target to 20 stop 10 target on the 15-minute chart. Because what I found is that the currencies will extend, but only maybe between 10 and 20 points higher, and reaching for 20 to 30 points will basically often leave you in a reversal mode, because currencies are really two-way streets, especially like in a long market. So here's euro yen, and if I was to use a 20-10 stop, for example, I think this would be, and I'm using, let's say I'm going both ways, I'm going to trade both sides. So I'm short here at 29. I think it goes up. I think I survived this. I literally barely survived this. Literally survived this by 1 pip, and then this makes target, so that's plus 10, right? If I'm using just only strong trend structures, this misses. The shorts, again, you can see the shorts are weaker, so that's minus 20, and the long here is plus 10. I'm basically flat on the day. Now, what I forgot to show you, what I really, really love, and this is actually useful both in currencies and in FX. What I love is what I call the reversal trade. The reversal trade, and let me just sort of show you how this plays out. The reversal trade is when we try to profit from failure, and that is a function where the downside or the upside fails. In other words, this fails to make profit, and then I get a signal to the upside. If I have a failed signal and then a true signal the other way, that signal tends to be a very, very strong chance of success. So in this case, I think this barely extends. This is 34, and it does go. It does extend all the way up to like 44. I am able to make 10 points here on the reversal. But this kind of a fail success is a pretty good indication of where I want to go. You don't have any more examples, except you get over here, failed success. That's a very, very strong, so you have 2 really high quality examples. Here's I guess you would call this a failure. This is kind of a very weird, it's just all over the place. But if this was the top, I don't know if this came down first, came back up. But let's, if this kind of stopped you out, let's just imagine this stopped you out for minus 20, and that would be considered to be a failed trade to the upside. So then the next trade to the downside is a really good signal, and that's a pretty good signal, to the downside. It's a really, really interesting filter that I like to use, and it's one that I think we're probably going to employ as the ultimate filter in currencies. It's not that the continuation trade doesn't work. It's not that success doesn't follow success, but again, it's a question of finding the absolute highest probability of success. So fail, because this really doesn't extend, for more than 10. Success, right? Success follows failure. So here, you had like 4 trades, all 4 winners. Whereas if you were just simply, following success, you would have more trades. You may have like 8 trades, but maybe 2 losers out of them. And the failed success dynamic is a really, really interesting dynamic that we're gonna try and encapsulate in currencies, because I think it definitely works in equities as well. But I think, because currencies are a two-way market, I really like applying it to the, to the fail success dynamic. So let me just go. Let me see this combo new. By the way, everything is more visible because everything is bigger. Would you agree with me on that? Is that true? Does that look good today? So here's another good example. This is euro, failed, success. It's basically the trade trigger here is a couplet. You got to have a failed signal and then a successful signal. And if you have that failed successful, if you have, successful signal, meaning that you have a breakout signal. Breakout signal is strong trend that is preceded by a breakout signal of strong trend that fails, right? So failed success, great signal, straight up move here. Let me just move this around. Failed success, great signal. And you can put a reasonable amount of what you define as failure. Maybe you just say to yourself, well, okay, from the time this signal triggered, which was 55, if it doesn't go more than 20 points in the money, which it doesn't, it only goes like 18, you would consider that to be sort of a failed down move, which you're basically looking for very shallow extension moves, a very, very shallow extension. The reason why the fail success thing works is because what it's basically showing to you is that sellers have no power or buyers have no power. And if that's the case, then whenever the market, takes the trend in the other direction, presumably you should have more extension. So, and you can see sometimes it's a much more powerful, much more powerful than just a couple of pips to the upside. Here's a clear example where the buyers have no power. So the buyers have no power over here, couldn't even extend it by 10 points higher, right? At which point we get a strong sell signal, and that obviously becomes, a very, very good sell signal. I don't know what the hell this may be market news or whatever, but like, what is this? This is 70. It goes down to 57. What's the high? I don't even know what the hell that is. Wait, hold on. 1770. And what is the high here? 86. Okay, so this still survives. Even in the worst case scenario, you had a 20-point stop, still survives, still gives you the 10 points. So this fail success, here's a fail success dynamic, right? Fail, because doesn't really go much in that direction, gives you a signal, doesn't go much, and then succeeds. Daniel's going to hate me because this is going to be actually very, very hard to the algos. We're going to have to figure out how to calculate this to the extension. But here, failed, succeed, right? You see that? I mean, I think we just went through like 6 examples of literally no losses, right? And we'll do, interesting thing is we may, before we even put it to the algo, we're working on the scanner now for this whole thing. So we may be able to create a scanner that will just give you that whole fail succeed combo. And if it's if it does that, then you can visually kind of say, oh, this one is setting up a failed failed move. Then I want to look at the next trade. Let's look at pound here. Currencies, I don't think you really want to trade on anything but the 50-minute chart. It's just not worth it. Too much noise. You have to, one, you want to know what's possible, right? You can force it. You can force the currencies to trade on a 1-minute chart. You can force them on a 5-minute chart. But you're just going to get a huge amount of very, like, my point is that I find the 10 target, the minimum time frame that the 10 target is working on is 15 minutes. So, if you want to go to 5 target, yes, but I mean, you're paying spread. I think the minimum the minimum target in currencies you want to just achieve is 10 points, right? Anything smaller than that is just not really long-term viable as a trading strategy because of spreads. Does that make sense? So if my minimum target is 10 points, I really can't trade on anything lower than 15-minute chart. The good thing is you got 1,000 currencies, so it's not, it's not hard to find opportunities. There's at least 5-10 trades a day on currencies, but so cable so far is trading fine. There's like I'm looking for failures. Here's a fail. Fail to the upside. Like you see it. It's so obvious that it's it's not even. It's so easy to catch it. Does not extend. Breaks. Fails. Boom. Super easy. I'm taking this trade. Sort of the assumption is if you fail, I'm very likely to succeed. I fail over here. I succeed over here. Right. Success always follows failure. Right. This is, good two-way markets. Here's a fail. Here's a complete and total fail. Now, this is interesting. This is the first. I think we've looked at around 12 to 13 examples, right, across 3 different pairs: euro yen, euro dollar, pound. I looked through really quite a lot of different pairs, different examples. This is the first example of a double failure where it fails to the downside. We get long here. We get stopped out. This actually, takes us right into the trade. So, in the worst case scenario, we were 1 for 1 on a structure. Isn't that interesting, guys? So that's basically it. I'm looking. There's nothing going on here. It's super quiet. I haven't even looked at the German. Let's look at the German. I think I unfortunately, my apologies, but I think I missed. There was a, what time was this? 17:05, 10:05. I should have. We had a trade in German. I missed the trade in German. I'm sorry, guys. I'm just as I said, this whole week I'm trying to since we finalized all the tools, I'm really trying to spend much more time on education than trading. So it may very well be that we just don't have any trades today, which is okay. By the way, sort of like a really, really interesting side note. What do you see here? Complete and total abject failure, right? First of all, we don't take the downside trades, but if we get a downside failure and an upside signal, we love that. I mean, that's as good a trade as we can get. A downside failure with an upside signal really, really gives us high confidence that the buyers can extend the move, right? Nasdaq now finally, coming back after initial burst. Dow is down. We got nothing going on here. It's just sort of very, very quiet. Let me go to 1 minute chart on the Dow here. It broke without a strong. I mean, this wasn't the strong sell signal. It was a kind of a weak sell signal. But then then it continued to the downside. We could do a million different stupid things. We can try to scalp to the upside. We can try to guess where the next tick goes. But the point being is that if you want to focus on just the absolute clearest trades, then we just wait until we get the setups. How do you set up the stop and take profit on the EA? Are you familiar with how EAs work, Peter? Okay, so then there is in the EA there's a stop. Yes, you think. Okay, so you would really benefit from either watching this MT4 course, which is my free course, or attending. You can watch this, which will tell you exactly how to use an EA, because it's not a conversation I can have in chat. You really need to understand how to use MT4. Or I'm running a free MT4 course all through the month of April, and you're free to join that. I'll email out the conditions. Okay, so you know, that's pretty much it today, guys. It's Friday, and I don't think, you know, there's nothing really showing up here. All the trades are, well, you know, the only thing I can wait for is possibly the Dow turning, and possibly, I mean, the S&P is not even close to turning. I need the S&P to turn completely, and then get long over here for me to really trade this. S&P I had one trade in the S&P, which was this trade right there. So, you know, the flip side of this is that I'm doing very few trades. The good side is, and by the way, look at this. I didn't even notice this. Utter, complete, abject failure, success signal. Boom. Success follows failure. Right there. You know, what the indicator does is visually isolate the points of failure, which allows us to have high confidence that they'll be followed by waves of success. Right? That's kind of how it plays out. Cheryl, Cheryl, do you hear me? Okay, so there is clearly something wrong with your connection, because you've been having problems all week long. Nobody else is, everybody else is seeing a clean, clear screen. They have good connections. I don't know what's going on. Maybe it's your computer, or maybe it's your connection, but it's not on my end, it's on your end. So maybe you want to change computers. Regardless, you can, you know, you can always watch this on demand, because I'll have this on video, of course. But you know, this is something you got to solve, because I can't. There's nothing I can do on my end. Everybody else can see my screen clearly. Yeah, I don't know what's going on. It seems like your computer is having Zoom issues. Maybe you're running too many things on your computer. You know, whatever. I don't know. Anyways, so hopefully I'll have. Okay, I'm back now. So it's yeah, it's something, you know, it's something going on with your fiber connection. So, you know, next week I should have the scanner. Hopefully, I'm going to speak to Daniel, and that'll be kind of the final component. That'll be a really nice piece, because then we can run it across multiple instruments, multiple time frames, and just kind of look for ideas during chat trading session. Next week we're also going to go to a 9:45, 10:45 time frame, so that we can try to catch those 9:45 trades if we can. And what else? And you know, we're starting, you know, like if you guys want to just scalp with me, this is good. I mean, let's play around. I'm long 601, just for argument's sake, on the Dow. Let's see if we can run this up to 610 on the move here. Just you know, just for shits and giggles. But you have to have a kind of a big stop here. I think you need like a 70 stop, because this thing is going to, you know, scale back and forth before it consolidates. But it's not, you know, this isn't, you know, I'm just fooling around as the final trade of the day, because it looks like the market is starting, you know, wants to turn. You know, we had the big up move, corrective move, but the bias still, I'm just basically looking at Nasdaq here, and everything else, the bias just feels like it wants to go a little bit higher. But again, feels like is not an analytical trading tool. It's just us screwing around. That's why we have the indicator, which are very definitive, which are very quantitative, and which are much better than feels like. But they don't show up all the time. Okay, any final questions? Anything else on your mind, guys? Anything else you wanna, you wanna run by me? We can look through more currency pairs, but I really don't see anything, setting up here. You're turning cable. Okay, cable. Oh, this is a 15-minute chart. Yeah, it's 15-minute chart. Cable possibly putting a long entry here. Let me see if it actually. Oh, it's interesting. Not popping up on my algo, but that's because my algos may be down again. So yeah, so cable has a potentially like long entry, a long entry here at 32. But it looks like it, honestly, it looks like if it triggered over here, and the high here was, what was it, 43. So it would have already triggered plus 10 on this thing. So we're kind of late to this trade that's floating around. I'm not sure, I'm not sure I feel really, really great about this. Let's come back to here's my Dow trade. Dow is just kind of hanging, doing nothing. So that's, yeah, it looks like it might go down. Nas plus 6. Yeah, Nas is definitely the stronger turn. You could just really, really see, the Nas turning over here. Nas is very likely to produce, well, if you're on the CFDs, but even on the futures, possibly produce another buy signal for us if it kind of consolidates and pushes higher. So we can watch that price action a little bit. And that's pretty much it. Okay. So Nasdaq is, starting to move into the. Well, let's watch Nasdaq. Let's see if we get a trade here. Let's also see the Dow is just also curling up, possibly to the upside, but not really trading up yet. Markets are a little quiet. We had the PPI data, which was super hot, but the market seems to be shrugging that off. We still seem to be positive bid here, and but it's Friday, so a lot of times Friday, runs kind of run out of gas by noontime. Generally by noon Friday, I want to be flat all positions because at that point, price action really slows down. And this week is especially slow because of Easter holidays. So volume has really, really been slow. Just watching NAS is really not moving much here. Kind of falling off on the move. Okay, guys, let's wrap this up. We had a good week. We've made a tremendous amount of progress. We have two very, very clean, clear definitions of how we want to trade. So you can look for those kind of the fail succeed pattern on currencies, and just the straight up buy pattern on indices. And both of those are very, very valuable. Looks like we're not, we just kind of not extending, coming back. But this is also very typical where it just comes back down, consolidates, builds up, maybe goes higher. It feels like there's, the market is doesn't have a lot of conviction either way. We had the big sell-off ahead of PPI, come back, retraced it. Now the sellers are trying to bring it back, but it looks like it's in equilibrium condition. And nobody really has a lot of convictions one way or the other. So it could be a very dull market for a little while. And when it's a dull market, there's no reason to participate. But anyways, I hope you guys all enjoyed it. Thank you so much. Next week I should be able to have the scanner as well, and that will be like the final edition that we have. So I'll let you guys know. Everybody have a great weekend. I'm going to see everybody on Monday, but we start our regular trading. Remember, next week 9:45, 10:45, better trading hours, so we get some more opportunities into the mix. Okay. All right, guys. Everybody have a great day. See you later.